This section is around receipting practices. And the first part will really look at some basic receipting practices in which there is no advantage involved for the person who is donating. To understand receipting, we really need to understand the concept of what a gift is. Basically, a gift is a donation that is provided to the registered charity and really is a voluntary transfer of property without the donor expecting anything in return. And to qualify as a gift, then there are three basic criteria that need to be respected. First is that it is given by a donor, and that means that we really need to be able to identify who the donor is. The second is that it is given voluntarily. So for example, if someone has been directed to give me some money because of, say, a court order, then that doesn't qualify because that's not a voluntary gift to me as a charitable organization. And the third part is that it's given without any expectation in return. So the donor provides that gift to me without the expectation that, maybe I'm going to do business with them later on or something like that. There's not any future arrangement in regards to the gift. So these three factors need to be kind of respected for something to be qualified as a gift. Now, a gift can be either a cash gift, which is pretty simple. I've been given $70, or it could be a gift in kind, which is a little more complex. And there are guidelines around a gift in kind. So, for example, a gift in kind could include artwork, or lands, or buildings, or equipment, or could include publicly traded securities, or certified cultural or ecological property. Again, some of these have very specific guidelines that relate to them, but basically a gift in kind is a property that is provided to me. And a critical element of this gift in kind is I need to be able to establish what is the fair market value of this gift which is given to me. Now, the definition for fair market value is on the screen, but it's basically what would this item be worth to a knowledgeable buyer and seller in the open market. And that would be what would be considered the fair market value of this particular item. We've constructed a decision tree in part of our resources, and this is just a little overview of some of the components of it. It's really, a gift is received. You really need to be able to establish, can the donor be determined? What is the value of that property? Because if you can't establish the fair market value of that property, then in fact you can't give a receipt for it. And is there voluntary transfer? If any of these elements can't be respected, then there's no receipt that can be provided in regards to the donation. Now, in establishing the fair market value, the basic guideline is that if it's under $1,000, the charity can establish the fair market value of that particular item. But again, they're assuming that the person who is establishing that fair market value has some degree of competence in establishing what that value is. If it's more than $1,000, then CRA strongly recommends that you get some professional advice, someone who's really trained in dealing with that particular product and has the background that's really appropriate. And part of that is also that this person is a third party. They're really not connected to either the charity or the donor, so that value isn't inflated or deflated in order to accommodate the needs of either of those groups. Now, once this property is appraised, then the name of the appraiser and the address, etc., is also expected to be on the donation receipt so that CRA can reference that if they wish. What doesn't qualify for a gift and therefore cannot be receipted? The main issue that comes up in conversation is a contribution of service. That's time, talent, or skills. This is a common question that's provided to CRA. I will give you my services. Please write me a receipt for those services. Basically, that's not appropriate. You can only receipt for a property, and a service is not a property. So what CRA often recommends is that there's a transfer of checks, basically. If somebody provides a service to your charity, then pay them for the service they provide, and then they can turn around and donate that money to the charity and then you provide them a receipt for the cash that's donated back to the charity. That way there's a financial tracking of money going in and out, and it doesn't complicate any issues. Other items that you can't receipt for, things like a membership fee. Now, you can receipt for a membership fee if there's no benefits that an individual would get. But if they do get benefits, things like they get a magazine and they get some T-shirts or other, they get a meal or something like that as part of being a member, then there's other advantages. So they need to be considered in regards to the actual amount of money that a person can get for that membership fee. Some of the other items that are identified, things like admission fees, purchase of goods, loose collections. For example, loose collections, you can't determine who the donor was, therefore you can't provide a receipt. Pledges, well, you haven't really received the money, it's just a promise of receiving something, therefore you can't donate, you can't give a receipt to something that actually hasn't been given to you. For example, gifts of little or no value. For example, used clothing that's been donated to an organization like Goodwill. That can't be receipted, or the purchase of a lottery ticket can't be receipted because there's the possibility that I might end up winning. So there's an advantage that I receive. So there's items which can't be receipted because they don't really respect the three criteria around being a gift. Other things that can't be receipted, you can't receipt for another charity. The issue about controlling the receipting process is really critical, and you really can't receipt if you can't establish the name of the true donor. Sometimes somebody might donate something in the name of a variety of other donors, and if that occurs, then you can't really receipt that person because you need to receipt the true donor of the gift that you receive. General receipting guidelines, you need to prepare all official receipts in duplicate and keep copies of all of these receipts. All of these receipts need to be individually and sequentially numbered, and again, you need to be accountable for where all of these receipts are. Make sure that each receipt has an authorized signature, and you need to retain these receipts for a minimum of 2 years, although there are some different guidelines for what they call 10-year gifts. And that all receipts must contain the information that's identified on CRA's website, otherwise they could be disallowed. For example, this is the information that CRA has identified on their website that needs to be on each receipt. The charity's name, their address, their registration number, the amount received, the total donation received, who was donated by, the address of the donor, etc. So all of these items need to be on the receipt. If the receipt involves a non-cash gift, then we also need to have a description of the property. We need the appraised, who is appraised by, the name of the appraiser. Or if there's an advantage, and we'll talk about this later, then we also need to look at what is the value of the advantage and the eligible amount of the receipt. So all of these items need to be on the receipt.